Good afternoon. It's Friday the 7th of March 2020. This is the third update we've done since the start of the coronavirus caused world markets to fall, and obviously we want to keep our clients informed as best as possibly can with any developments that's going on, and again hopefully try and pass some messages across to reassure you as to sort of what the future may hold. So we've again had lots of updates from various fund managers who we've spoken to this week. Both Jordan and Natasha have listened in on various webinars. I've personally spoke on the phone to a couple of people, mainly Legal & General, T. Rowe Price, JP Morgan, have sent information across. Had Fidelity on the phone as well yesterday trying to give us an update. I'm sure everyone's been watching the news, and the key things that we've been seeing this week was the huge government stimulus that the US government has put in. There was some to and fro at the beginning of the week, but ultimately they've agreed to put another $2 trillion, which represents 8% of their GDP, into sort of financial sort of stimuli, which will hopefully help their economy recover. On the back of this, we've seen world markets increase over the last few days. Germany's talking about doing something similar, 7% of their GDP. Fund managers we spoke to did express that there are still some concerns out there. Trump saying that he wants to get the economy reopened in April, or Easter weekend he's talking about. I'm watching CNN every night, about 9:30 he comes on, and as I say, he again reiterated that last night. America will be able to get its economy quicker than other economies because they are starting to test a lot more people. Testing is the real key to this. If you can find out who in your society has had the condition, is able to return to work, then you're a step forward. The UK is going to start doing a lot more tests themselves. Once we get more people tested, the effects of lockdown will start to come through. We're starting to see a reduction in its new cases, albeit the number of deaths is increasing, and then there's the hope, as I say, that filters through into the UK once our lockdown, which is still only a week old, gets through to being 3 weeks old. Some interesting information that we picked up as well. March 2020 has seen more senior management people within companies actually buy their own stock. That in itself will tell you that a lot of these people believe that their company's share prices are massively undervalued and that their companies are going to recover. You do hear like the odd story. I mean, going into this, there was various senators in America who were selling their own shares in January because they knew information before it was released to the market, so they were getting out shares before the markets collapsed. Hopefully those people will be tried in court and maybe go to jail for doing that. The flip side of that now, though, is that you're seeing companies whose main managing directors will be looking at what their company's worth and saying, look, we're undervalued, the share price is really low. I was looking at various shares earlier on in the week. I don't know if you saw Disney Plus was launched on Monday. Disney shares were down 50% from their high point last year. They surged on the back of this new streaming service going live. So there's a lot of opportunities out there. I've just been speaking with employees of Caterpillar who said they've seen their share price from $140 a share down to $90 a share, and they're now coming back up. So these companies aren't going to go bust. These companies will survive and will come through the other side sometimes stronger. We're seeing Chinese stocks, which hit their bottom of the market when their infections peaked a few weeks ago. They're now starting to recover. And I think I mentioned this last week. The encouraging thing is that a lot of the fund managers we use are now taking advantage of being able to sort of invest in these stocks that are going to hopefully recover quite quickly once we get through the worst of it. When is the worst of it? Well, when the UK and the US have the worst of their infections and the number of deaths sort of reaches a peak and comes back down, then you might see the markets start to turn quite quickly. Right now in this country, we're very fearful of what the after effects of this may be. Obviously, the government's doing everything it can to self-employed people, employ people, to make sure people have income coming through this time. A lot of dodgy employees are taking the opportunity to get rid of members of staff. I know Wetherspoons and places like that have got a lot of people. Mike Ashley's getting some pelters in this. So people are really concerned what will happen at the end of it. But from the point of view of what world governments are doing, it can only be seen as a positive thing to try and lift the markets at the end of this. So I mentioned there that the US Treasury was agreeing to put in $2 trillion to fight this battle. The Germans were going to put a hell of a lot in there as well. And as you can see there, the world markets, whilst they're down massively from January the 1st that this graph shows, you can see that up until the 20th of March, when they hit their all-time lows on this crisis, they have bounced back quite nicely since then, and it's been quite surprising. I think the Dow had its best day, one of its best 3 days in history earlier this week, as this financial stimulus news came through and the market suddenly recovered. The pound had fallen to something like $1.11. And that's now $1.24. So you can see that the markets like what world governments are doing. You might not like what you see on the news. The NHS is going to go under more pressure. More people are going to die. But the stimulus and what the governments are doing is going to come through. We've put this slide in here. Two of our portfolios that we look after, we've set up ourselves called Risk Score 2, Risk Score 3. We have a lot of clients invested in these portfolios, so we can get the data from these portfolios much easier than we can from, say, Royal London or Prudential or Scottish Widows or whoever, because we have this data more closely at hand. So we've been working on this graph, and this just shows that if you're an investor who had £100,000 invested in the middle of January, how your fund would have performed. As you can see, all the way through to about the 19th of February, the fund was coming along nicely. We had good growth in the previous about the 6 months leading into this, and funds reached their all-time high really about the 18th to 19th of February, and as you can see, an absolute sort of very quick, very sharp downturn. Risk Score 3, which has the highest exposure to stocks and shares, is the orange line. That went down right by around about 20%. So for someone who had 100 grand in middle of January, you were down to just above 80,000 or slightly below. I think went down to 79,000. The Risk Score 2, which has a lower amount in equities, lower amount in stocks and shares, that was down around about 16%. But as you can see, in the last week, those have recovered. The bottom of that does look like a bit of a W, and that's what we're going to see over the next 4 to 6 months. The markets will have a good week, then they'll have some negative news stories. So today, the Prime Minister's confirmed that he's got the coronavirus. That wobbled the markets a little bit. They were about 2.5% down. That information came out, and then they fell about 4.5 to 5% down. So that's how we've ended the week, though, is in positive territory. We hope sort of every week thereafter will be the same. It's not sort of nail on that will actually happen, of course. So what do we expect to happen next week? Well, you're going to be bombarded again with more negative news stories as the number of infections increase in both the UK and the US. Higher death rates. We're seeing today, I think Italy recorded over 900 deaths in the last 24 hours. Unfortunately, that has to go up before it'll come down. But the testing kits that are going to become available, the markets need to see those to be being utilised and being used. And if we can identify how many people's had this, then we can get people back to work. Donald Trump's crazy prediction that we'll be back at work by Easter might actually not be that sort of unrealistic if we can get millions and millions of people tested. We are going to start to see bigger swings on a daily basis where the market goes up, where the market goes down, and we need to see a reduction or a slowdown in the infection rate. We mentioned this R rate last week, which is the rate that you infect somebody else if you've got the illness. We've asked for updated figures on that from Legal & General, who gave us it last week. But they said that they're still working on that because the data is changing so quickly as more and more people are getting tested. So we're hoping that on next week's bulletin, which we will do again, and say we're going to do this every week, we'll pass information on about that. If anybody needs anything from us, please get in touch. We've spent all this week doing certain fund changes on parts of the portfolio where we made recommendations to change last week. That didn't apply to everyone, but those clients who were contacted, we are making those changes. So nobody needs to get in touch about that specifically because it's all ongoing. But if you wanted to speak with me about anything, please give us a call. As you can see, I'm in the office in Durham right now. All the staff are working from home. That's a challenge in itself. We've moved files up onto the cloud so that everyone can use them wherever they are. We've got the office phones diverted to people's mobiles. But by the end of the week, I think we're in a much better position than we were at the beginning of the week, not just because the markets are gone, but because we know how we're working with each other. I'm driving around dropping files off people's houses. We've sent things out in the post. We've got Amazon delivering stationery and other things everywhere. So we are making the adjustments required, and hopefully that's giving you the reassurance that we're doing the best we possibly can for you. As I say, that ends this week's bulletin. We'll be in touch soon.